ChargePoint just dropped its Q1 Fiscal 2027 earnings, and if you own the stock, follow the EV space, or just want to know whether public charging is finally having its moment, you need to hear this. We're counting down the 10 biggest takeaways from the call, starting at number 10, and working our way to the most important revelation of all. Stay with me, because number 1 might genuinely change how you think about this company. Coming in at number 10 is the Eaton partnership, and it's more strategic than it sounds. ChargePoint and Eaton are actively co-developing next-generation AC and DC charging solutions, opening doors to customer segments ChargePoint couldn't reach alone. Management described the early signals as strong, and the partnership is directly feeding the product roadmap, including future DC-only versions of their new hardware that could dramatically cut installation costs at scale. At number 9, ChargePoint racked up some notable customer wins in Q1. They landed their largest ever transit fleet order, supplying DC fast chargers to Santa Monica's Big Blue Bus as that agency pushes toward full electrification by 2032. They also added Citibank for workplace charging and expanded their relationship with OB Power to deploy 2,500 ports across multifamily housing at little to no cost to landlords. Number 8 is a milestone investors have been waiting on, a genuine path to profitability. Management flagged the possibility of generating positive operating cash flow before the year is out. The levers are inventory sell-through, improving EBITDA, and tighter operating expense control, and notably, all 3 are already moving in the right direction. Number 7 is about platform scale and port growth, which are the company's core growth metrics. Total managed ports jumped to 406,000 from 385,000 last quarter. Software-only managed ports, third-party hardware running ChargePoint software, climbed to 135,000. European ports grew from 131,000 to over 145,000. Monthly active users nudged past 1.48 million. The network is quietly getting bigger every quarter. Number 6 is the one product getting the most buzz on the call, Express Solo. ChargePoint calls it the world's fastest standalone DC charger, delivering up to 600 kilowatts to a single vehicle in a footprint smaller than competitors' 400 kilowatt units. It uses an air-cooled, modular architecture that avoids the catastrophic failure points of liquid-cooled systems, and its early access units are already fully committed, meaning demand is real and immediate. Number 5 is gross margin durability. Non-GAAP gross margin held at 32% in Q1, up 1 percentage point year over year, driven by pricing discipline and the capital-light, software-led model. More importantly, management expects margins to reach new record levels once the next generation of products ramps in volume, and those gains are expected to be structural, not one-time. Number 4 is how AI is reshaping the business, and this wasn't vague executive speak. ChargePoint is deploying AI across software development, customer support, product capabilities, and business process automation. The Q1 OpEx reduction is already partly attributable to AI. Looking ahead, upcoming software releases will help customers optimize charging infrastructure more intelligently, better diagnostics, smarter energy management, and faster issue resolution. Number 3 is the broader EV market tailwinds fueling ChargePoint's opportunity. Gas prices are widening the cost advantage of EV ownership. Used EV prices are nearing parity with comparable gas vehicles. New models under $35,000 are entering the market. In Europe, fully electric car sales jumped by nearly a third in Q1 2026. And once someone goes electric, they almost never go back. EV retention rates consistently exceed 90%. Number 2 is the Europe expansion story. Express Solo is the first DC product ChargePoint has ever designed for the European market, meaning an entirely new revenue stream is opening up. Early access units are largely committed to existing European software platform customers, and management expressed clear optimism about the growth potential there as the product enters full production. And the number 1 takeaway from this earnings call is the revenue beat and sustained growth trajectory. ChargePoint delivered $102 million in Q1 revenue, above the top end of guidance, marking the 3rd consecutive quarter of year-over-year growth. Q2 guidance calls for $100 to $110 million, representing roughly 7% growth at the midpoint. After years of restructuring and cost-cutting, ChargePoint is now demonstrating that it can grow profitably, and that changes the investment narrative entirely. If you found this video helpful, don't forget to subscribe for more earnings analysis from Earnings Central.